Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil markets. I'll start with Paris rapeseed. I said 4 weeks ago, then requoted it these past weeks, and I quote this once again today. This one has been a harder market to fathom compared to the others today. End of quote. Going back a bit, the changeover gap 3 weeks ago made it just that little bit tougher. Originally, I'd referenced this to how we'd see a monthly key reversal down in November last year, which was immediately countered with some remnants by a bigger key reversal up in December. This big gap just made it harder on the continuation charts. Anyway, let's look at what we've got. So, after the changeover gap, which incidentally had been halted at the combination of the optimized February 2021 to-date uptrend, currently at 619, and the rising long-moving average, currently 609 and 3/4. After this market halted, it started to utilize these two supports as a base and started to move higher, slowly filling in the huge gap. Personally, I favored the rising long-moving average as being more influential in this halt and base building than the optimized uptrend. But the optimized uptrend did start taking over during the middle of last week. Then came today's action, where we have seen some very interesting pieces of work. For start, the gap higher now leaves most of February's action as an island, possibly an island bottom. Then there's the size of the move up, moving up all the way to halt at the 50% projected Fibonacci line at 750, which is where we had some much bearish pressure back in early January. Then finally there is the big drop down that we have seen to actually close down on the day and possibly have the biggest bearish shooting star pattern that I have ever seen stare right back at me today. Now, it doesn't take much to fill the gap left below and make the island part of the main piece of work, but it very much depends if prices have the incentive. I should point out that the big move up and down has ended with the market sitting on the medium moving average, just below it now actually, currently at 669.5, with the short medium moving average just above that, currently at 678 even, and well below the recent 50% Fibonacci line at 683 and 3/4. So watch this space. Winnipeg canola. The market has, as I've reported here extensively for many weeks now, had a somewhat uncommon, to me at least, pattern formed since early November 2021 until today. It was a sideways pattern and is known as a rectangle pattern, currently between 945 and 1038.60. I'd highlighted this pattern a few times now, as it had an axis seemingly around the May 2021 high in the 107-108 area. Interestingly, the move lower in early January was halted just ahead of the base of the rectangle by the rising medium moving average, currently 983.30, which caused the combined daily key reversal up and bullish engulfment pattern 5 weeks ago. Why did I note this action? Well, the medium moving average has gradually entered the frame of the market once again, and one should bear in mind what happened when it last did this. Plus, we have not been below the medium moving average since June last year. Then there's today. The market broke up and out of the rectangle pattern and made a try higher by running out of energy just over the projected 50% Fibonacci line at 1085.10, before dropping away back down, but not far enough to make the pattern bearish, at least not yet. Now, I've discussed this extensively, the outcomes for this rectangle pattern for quite some time. Thus, at first glance, it looks like a topping pattern. However, that is not necessarily the case. Such patterns could also be a continuation pattern. Indeed, overall, the chances of a break higher, interestingly, run at about 65% of the time, which seems counterintuitive. Nevertheless, that is what the data indicates. Additionally, breaks higher perform much better than breaks lower. Now, it is early, but I feel obliged to suggest a possible target X on the upside for this pattern. Hence, you could see, as I previously pointed out, a potential move up to the 1111 area. Today, prices have gone a long way towards that, yet there's one thing to bear in mind, and again, I must repeat myself here. If we see a determined break, and then prices revert back within the rectangle, in other words, it becomes a false break, then there's a very, very high chance that the market will subsequently move in the completely opposite direction to the originally attempted move higher. The chances are something like 7 to 8 times out of 10. So be wary, and please just remember this point if nothing else. Burst Malaysia crude palm oil. The long-term feature, which I have droned on about for months and months, has finally been breached. The January to June 2021 bullish Andrews pitchfork yesterday saw a move up and over the upper time, currently at 65.38. Earlier today with a bullish open and close long white Mariposa. This is a major move, and prices even went and closed over the 50% projected Fibonacci line at 65.71. This left no nearby patterns, Fibonacci levels bar the 100% projected Fibonacci line at 72.74, or any other levels to look at as resistance. I had to look back and draw the September-December 2021 bullish Andrews pitchfork to even look at something that would work and work well. Well, it sort of does. Neither the lower time, currently at 5400, nor the now more important upper time, currently at 69.78, have ever been tested. But the middle time, currently at 61.89, well, that has been interesting resistance back in late January. Hence, the upper and middle time of this Andrews pitchfork will be the ones to watch in the coming days, possibly weeks, as well as the broken upper time, currently 65.38 of the original January to June 2021 bullish Andrews pitchfork, assuming it still has some fight in it. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.